think it's a really interesting question. This development of the secondary market is definitely a natural next step from a maturing and growing primary VC ecosystem in Europe, and there's definitely a catch-up effect that's also happening. So we think this is going to continue to grow. It's here to stay, and that's reflecting 5 years of consistent growth in the primary market, fueling an ever-growing pipeline in the secondary side of things. One huge advantage of the secondary market is increasing investor confidence by generating more information, more access to liquidity in one of the last asset classes in Europe with very little secondary liquidity. So we think that encourages investor confidence. This goes hand in hand, though, with other pillars that are emerging in Europe: institutional investment, government initiatives, university initiatives, a lot more institutional investors deploying more capital in Europe and really deciding to allocate through cycles as well. And so we think the national initiatives, along with the private sector initiatives, are really, really important. So I think the secondary market is developing in different ways. Myself and our firm are focused on the direct secondary side of things, where we think that with the companies staying private for longer and companies being able to finance themselves in the private markets for longer, that you are going to find early investors, founding team members, institutional investors and family offices that would be looking for some sort of liquidity. And that can help them manage their portfolio, be much more proactive in terms of managing their portfolio through a cycle, managing country concentration, sector concentration. And so we think that's going to be more and more common as the market grows. And so we're going to see different types of actors trying to think about secondaries in different ways. And they could be through fund secondary transactions, but also direct transactions, as there's more and more companies entering that late stage growth, but staying in the private capital side of things.